Good morning, everybody, and welcome to this, our second Nedgroup Investments Multi-Manager webinar for 2021. I'm Trevor Garvin. I look after Nedgroup Investments Multi-Manager division. What we are going to be bringing you over the next 2 days, we hope, will be great and interesting commentary from a number of thought leaders across a wide range of topics. Being a multi-manager, we manage both a range of domestic and international multi-managed fund of funds, so we get exposure and have relationships with a number of leading South African asset managers, as well as a number of global managers placed all around the world. So we really invite some of our managers that we use within our funds to come and present their areas of expertise and give us some of their pearls of wisdom really across a wide range of interesting topics. Over the next 2 days, from 10 o'clock to 11:30 a.m., we'll be covering a wide range of topics from domestic to global equities, politics, economics, sustainable investing, and asset allocation areas of investments. What we're going to also be trying to do is just keeping all of the presentations quite short, sharp, and focused. Generally, it's around about 15 to 20 minutes per presentation, with 1 or 2 questions that we will get from the audience that we will speak to the various presenters about. What we thought would be interesting is just starting off with setting the scene about some of the trends that are currently shaping the asset management industry. And these are trends and issues that certainly we at Nedgroup Investments focus a lot of our time on in terms of our management meetings and developing our strategy looking forward. So very briefly, I've put together 8 trends that we feel are shaping the industry currently and going forward. So starting off with the first one, which is ESG, environmental, social, and governance. And this is really an area which I think certainly we as Nedgroup Investments have covered a lot over the last 12 months or so. It's something that, as set out by the United Nations Principles of Responsible Investing, has been widely accepted within the asset management industry. And I think it's something that up until now used to be seen as a competitive edge by certain asset managers, but virtually now in terms of investors is becoming the norm and largely expected by fund managers when managing their investments. What's also quite interesting is that research has shown that companies that take ESG seriously tend to be showing in their business models and their earnings and growth revenues increased profitability moving into the future. Second trend that we see is the rise of enhanced passive funds, or otherwise known as rules-based investing. This isn't something new. It's something that's probably been on the rise for the last 10 years or so for a number of reasons. First of all, over the last investment cycle, over the last decade, markets have certainly been interesting and a tough environment, and many active asset managers have struggled to keep up with some of the main indices. This has caused a move into these passive index tracking type funds, but also with regulation and increased transparency of fees, there's been downward pressure on fees and a wish by clients to pay lower levels of fees. And hence, we know passive funds are priced cheaper than active funds, and hence a move towards this part of the market. What's also pushed it is, relatively speaking, the last decade or so has had some periods of lower returns, and certainly in a lower return environment, we see lower fees plays a bigger role. So that takes us really to the third trend, which is fees remaining in the spotlight. And here we see also changing regulation that has affected transparency. We see a much greater emphasis on transparency in fees, and this has also resulted in downward pressure within fees. And this isn't fees only on the fund manager. We see this across all areas of the chain. So the fees that fund managers take, the fees that administrators take, the list platform fees, as well as even the fees that financial planners and wealth planners are having to take in terms of the financial advice that they give. This leads us to the fourth trend, shaping the environment, and we've really called that personalization of services to meet customer expectations. What we see is with improved technology and data gathering, companies are analyzing this data and using it to develop much better customized solutions that are very specific to client needs. So personalization of tailor-made client solutions has certainly been the way forward. Moving to the next trends is machine learning is helping eliminate cognitive biases in investment decisions and fund management. So this is an area which we'll actually be touching on in our 2 presentations time when my colleague Sunay presents. But behavioral finance and psychology has taught us how biases can very often negatively affect investment decisions. And if we can get rid of our emotions very often when it comes to investing, we very often can make better investment decisions and choices. And by using machine learning to eliminate those emotions and biases out of some of these investment decisions when managing funds, research has shown has actually helped some active managers increase their alpha or outperformance by between 100 and 250 basis points. Our next trend is alternative investments, and this we really have seen a constant increase in the demand and across alternative investments, and this is across a wide area of types of investments. So we see this happening in things like private equity, venture capital, sustainable projects, infrastructure, energy type products, wind, and also within certain areas of the hedge fund industry. And I guess there are various reasons for this, but some of it was played out with the COVID crisis in March last year, when we saw markets fall by between 30 and 40%, literally over about a 10-day period. And we saw that many asset classes were highly correlated during this time. And I think people and investors are searching for non-correlated assets, but recognizing also that there are certain liquidity issues that they may face. Our final presenter today from Goldman Sachs will be actually touching on some of these topics. The seventh trend is digital distribution models will take products directly out to the end consumer, and we see the rise of robo-advice, artificial intelligence, and outcome-based investment products. So I think certainly we see this widely across the industry, both within South Africa and globally, is this increased use of digitalization, and where clients are able to access investments and investments advice very often directly over the web and do many of the investments on their own. What we also see that's quite interesting, and a trend certainly happening, particularly in the States and Europe, is the baby boomers who are all now in their 60s, 70s, and 80s with a very large amount of wealth that they have built up over the last 30, 40 years and are slowly passing this wealth onto really the millennial generation. So we see this massive transfer of wealth intergenerationally happening, and very often these millennial users are now using robo-advice, artificial intelligence, etc., to invest their newfound wealth that they've taken over. And that really leads us to the last trend shaping the industry that we also are spending quite a lot of time on, and that is with our move towards flexible working environments and this digitalization is that the need for cybersecurity is gaining critical importance. So, of course, people working from home need to access their work information, client information that's very often held centrally on some remote site. And the need to keep this client information and work data safe and from fraud is really a key and important factor. What we also see is things like the development of quantum computing and other very powerful computers that are making it much easier for these powerful computers to break into company systems, client databases, and breaking through these personalized passwords. So things like cybersecurity, keeping client information safe and protected from increased levels of fraud is going to be a key area of focus for many businesses. So those are really, I think, 8 of the key trends that we see that are shaping the industry at the moment, and are certainly areas that we within Nedgroup Investments and the multi-manager area are focusing our attention on and ensuring that we keep up with the times and the industry in these particular areas. So that's really, I think, setting the scene for the next couple of days. Hopefully that gives you some food for thought. And I'd like to now move on to our first presenter of the morning, who is Nikki Weimar. She's coming in from Johannesburg, and she's a regular presenter on our webinars. She's Nedbank's chief economist. She has always got highly interesting comments and insights to give to us. And today she will be really talking about 5 key factors that she feels will be driving the South African economy over the next 12 months. So I'd like to hand over to you, Nikki, and welcome and many thanks for joining us.